Good afternoon, everybody. My name is Rod Schwartz, and I'm Chief Executive of ClearlySo. This is a webinar series on impact investment funds, and this series is sponsored by our partners, Paul Hastings, Octopus Investments, and ourselves. And what we do on a monthly basis, except not during the summer, is that we bring together terrific experts to talk about issues where impact investment funds are becoming a more and more prevalent solution. Today, as you know, we're going to be focusing on renewable energy, and we have three terrific panelists, and I'll let them introduce themselves in a second. Let me just introduce ClearlySo to those of you who don't know it. ClearlySo is Europe's largest impact investment bank. What that means very simply is that everything we work with, if it's an enterprise or a fund, it delivers, in addition to good returns, it delivers high impact. And what we do is we work with impact funds and also enterprise clients, and we connect them with investors from all across Europe. And in terms of capital, we've helped people to raise, it's over $500 million, and we've worked on over 200 transactions. So that's me. Let me turn it over to Alex to introduce himself, and then Lucy, and then Daniel.
Thanks, Rod. Hello, everyone. My name's Alex Brierly. I co-head Octopus Renewables. Octopus Renewables is the specialist renewable energy investment arm within the Octopus Group. So our team manage about £3.2 billion worth of renewable energy investments. In terms of technologies, we have several different renewable energy technologies under management, very large in solar, very large in wind, biomass to power as well. Geographies, we have large portfolios under management in 8 different geographies. Today, 7 of those are Europe, and we have a team on the ground in Australia. And in terms of the value chain, we, over our 10-year history, have been involved in the development, construction, and long-term ownership of the operational assets. So look forward to talking to you about renewables.
Thanks, Alex. Lucy, over to you.
Thanks, Rod. So my name is Lucy Rands. I'm an investment manager at ETF, which stands for the Environmental Technologies Fund, which I think you can see on my swanky background. And we are a London-based venture capital fund investing in high-growth startups in the sustainability space across Europe. We've been doing this since about 2006, so I would say kind of before it was cool. And we are sort of the venture growth stage. So we're backing companies that sort of have existing traction already, and we're sort of helping them to scale. Our funds come from a mix of the government, of financial institutions, and of corporates, some of which are the big energy companies. When it comes to energy, we're more looking at sort of new tech rather than infrastructure, but we also look at other areas that would fall under the banner of sustainability, so sort of new industrial tech or smart city tech. My background personally is in material science. I've been with ETF for 4 years now, and I spend my days, well, apart from on Zoom at the moment, I spend my days finding new companies to back and supporting our existing companies and helping them to grow. So yeah, very excited to be on this panel. So thank you to Rod and ClearlySo for hosting. And yeah, it's good to be here with Daniel and Alex as well.
Great, thank you very much, Lucy. And now, Daniel, over to you.
Yep, thank you, Rod, and good afternoon, everybody, and thank you very much for providing the opportunity to present today, and I'm looking forward for an interesting discussion. So my name is Daniel von Preyss. I'm heading up the private equity infrastructure business at Impax Asset Management. Impax Asset Management has been around now for a bit over 20 years, and we're sort of like at the forefront so as a specialist asset manager into the transition to a sustainable economy. We're probably regarded now #1 worldwide with $25 billion under management. We have 2 divisions. The one is what we call the listed equity side. So these are funds which invest worldwide under various themes in stock markets, but everything around the transition, which also includes, a green debt fund and a women's fund. And the private equity infrastructure business, which I'm responsible for, is investing in real assets with a focus on renewable energy assets and late stage development with a view to construct larger portfolios and then subsequently sell them on to the long-term, more yield-oriented investors. Technology, very much so like proven technologies with a focus of PV, wind, and hydro, but we more focus on small-scale hydro due to the lesser impact on the environment. And we're also now increasingly looking at what we call renewable enablers. So that's us. That's me and that's us. So,
thank you very much, Daniel, and thanks to all of you. So let me just say that I'm going to start off with a few questions, but I very much encourage people in the audience to send their questions in through the Q&A, and we will get to them as quickly as we can and get to them as many as we can. My first question is just really to get a sense of scale. So over the next decade, what is the scale of the need in dollar terms for investments into this renewable sector globally? And let's assume that we are going to meet our Paris commitments. And also, if you don't mind, can you break that out between how much of that money might come from government, how much might come from corporations, and how much from financial institutions like yours? Alex, we'll take things in the same order and then we'll mix it up. Alex, start with you.
So to how much is needed and sort of a sense of scale. Well, the sense of scale is enormous. We have a major sector going through what I think will be a once in a lifetime transformational change, and that transformational change being driven by the need to decarbonize. And depending on who you talk to and listen to, you'll get a different figure for how much money is needed by 2030. Goldman Sachs, for example, came out with a report a few weeks ago. They were talking about $7 trillion being needed for renewable energy generation alone over that time frame. If you read Bloomberg New Energy Finance, they have similar figures. So we're talking trillions of dollars required to make this change and meet those commitments. Who's going to finance it? I think institutional capital, so pension funds, insurance companies, has a huge role to play in the equity investment here. But you mentioned governments, corporates, that everyone has a role in this transition. So why should institutional capital be a big part of the financing? Well, why not? The assets deliver a long-term predictable income, and in a low yield macro environment that we're in, that's highly attractive. So it enables them to invest in assets that deliver cash yield and enable them to pay their liabilities for their pension fund members. So that's a big driver. Second big driver, essentially that's our money, it's our pension money, sort of me, you and everybody else around the world. And I think society now wants our pension pots and our savings to be put to work in responsible ways, and clearly decarbonising energy markets is a responsible thing to do given the threat posed by climate change. So in answer to your question, I think a huge part of the capital and a big role will come from institutional investors. To governments, what role have they played? I think they've played a massive role to date. So if I go back 10, 15 years to when I started in renewable energy, governments essentially had to catalyze the industry and put in place subsidies in order to scale the market and bring the costs of the market down. And they've done that now. Renewables competes very, very well against sort of more traditional fossil fuel power stations. So the government role of the last 15 years has been very much about fostering a market, scaling it. I think their role over the course of the next 15 years will be to be confident in the change that we're making and to provide the regulatory environment and the right investment environment to enable that cash from the institutional investors to flow in. And of course, banks are going to have a massive role to play as well, and those financial institutions on the debt side. So I think everyone has a role.
Thank you very much, Alex. Lucy, you're next.
Thanks, Rod. So I agree with Alex entirely that the scale is massive. But I do think, as he said as well, we have a lot of reasons to be quite optimistic about that. I think there's a real mood change in the last few years, an attitude towards, a positive attitude towards clean energy. And then the other thing is, I think if we look at how far we've come, it wasn't that long ago that wind, for example, was considered to not be viable, or that people thought it would never be viable because it wouldn't be cheap enough. But that's no longer the case. And I think today it's about 30% of the UK's energy need is covered by renewables, and on some days 100%. And that's actually an incredible achievement. So I think we've already come a long way, and I'm pretty optimistic about what we can do in the future. I think the other thing I would add, which may be a theme of what I'll say in this webinar, but I think investment into innovation is a really important factor in this as well, because it's innovation at the end of the day that often ends up finding new technologies that makes it cheaper and more viable. So I think that's a really important area. And the angle to be optimistic about on that front is that there's a lot of money going into innovation in that area at the moment through funds like ours. There's a lot of new investment in this space, and the corporates also, I think, investing heavily in innovation.
Great. Lucy, thank you for that. Daniel, obviously, we've already had some answers. I wonder if you could try possibly to help us with maybe a bit more precision on where you think the money might come from, maybe in percentages or something like that. But if that's not possible, still welcome your views on the whole area and what's happening. Thanks.
Okay, no, happy to do that. And being the last one on the question, you always have to come up with some new things rather than repeating. I mean, the numbers are big. We are more focused on Europe. So in Europe, we're working with 70 billion euros, or probably around $80 billion per annum going into Europe. So it's a massive number. So in terms of where the money is coming from, the percentages is, I don't have percentages, but I think I'd like to add a little bit. And I think we also have to take a different view on which geographies you are. Europe is, in our mind, a fantastic environment, not only because there's a lot of capital to be invested, but it also provides a very stable regulatory fiscal environment. It has broad political support across all parties, over the continent, and it also has a very stable, banking support. So in this way, in Europe, we don't really see the need for governments to provide capital, and other than providing the the regulatory framework to make sure that private capital feels safe. But I think what Alex maybe forgot to mention is where there's a lot of capital coming from, of course, is also from utilities, which start to switch over from conventional to renewable. And then we see a lot of money coming from the oil and gas companies, who basically, for image reason, for whatever reason, we have seen them as a big investor in the market. If you go outside of Europe, particularly in emerging markets, there you see, I think for quite some time to go, in some developing countries, you see a lot of need for government money, and that can come in different forms. There could be, direct subsidy, it could be direct investment, but we also have seen funds, for example, in Africa doing small scale PV, where while there is a private fund structure with pension fund money, you also see government institutions like the EIB coming in and taking sort of like the first loss on equity position, where they're a little bit trying to support the rest of the equity by taking on a bit more of the risk. So they're very different forms. But overall, I agree, this sector is attracting a lot of private capital, and what Lucy mentioned, most critical, renewable energy is now cheaper actually than most of the new built conventional or even nuclear power station, as you have seen, for example, in the CFD auctions offshore in the UK. It's sort of like half the price what which was requested and agreed for the nuclear power built out in the UK. So that gives you a good indication. So,
thank you, Daniel. And actually, you've opened the question, which is one of my future questions, but we'll go to it now, of where the opportunities are greatest by region. So this time I'm going to start with you. You've mentioned Europe. From a global perspective, where do you think the most attractive markets there are? And then Alex, I'll come to you, and then Lucy.
Yeah, it's a good question, but I don't think the question is, it's not a black and white question, because I think the opportunities is not a question is I don't know, Europe better than Asia, better than Africa, better than America. I think it's very much a question of what kind of return requirements you have. I mean, Alex mentioned pension funds, insurance companies. for them, the best opportunity are probably much more in, OECD and developed countries, because it provides their risk profile. If you are much more of a risk taker and you know what you're doing, you certainly, there should be more money to be made from an economic point of view if you go into the more frontier countries. The second, also, we are looking not necessarily where's the geography, because I think each geography provides a lot of opportunities. And I think the key thing is what kind of skill set you have. So we see at Impax a lot of opportunities in this late stage development and doing this construction, but that is certainly, there's more risk. For us, the risk is very manageable because we've been doing this for over 15 years. So we see very attractive opportunity, but if you're insurance companies, you don't have the expertise, you see the opportunity much more on the long-term, safe haven, fully operational and contracted type of asset base. So doesn't give you quite the answer, but I think the opportunities are everywhere depending on what you're looking for. It is a big market, there's lots to invest. And for me, the opportunity is very simple. And that's, I think, where we distinguish ourselves a little bit from the classical infrastructure is, which I always a little bit call the cost of capital shooter, because, these are assets which are existing and people, who has the cheapest cost of capital, they can make money. Renewable energy is all about growth. So you invest actually in the growth sector and you pick the country, the part of the value chain which is suitable for you, and there should be plenty of opportunities and room for all of us to invest.
So there's something for everyone. Alex, you have quite a global portfolio. Why don't you try to address, again, that same question?
So a lot of sympathy with what Daniel was talking about there. Let's talk about growth, but perhaps from a technology perspective first. My belief is that wind and solar technology is going to form the backbone of global energy markets. It's cheaper and greener, and it's growing phenomenally quickly. So for me, there's growth everywhere in that transition. What I find impacting and trying to interesting, and I'll try to bring a new perspective on the sort of where's exciting geographically. A lot of people are asking now far more detailed questions on impact. And one of the reasons we are super excited about what our team is doing over in Australia is the impact that they're having. Now, in the UK, for example, we are some way through that energy transition. In Australia, they aren't. And a huge amount of the generation in that country is from coal. And so every megawatt of renewable energy you add, you have a significant impact on the displacement of coal and therefore sort of that decarbonisation agenda. So I totally agree with Daniel. I think sort of trying to establish where's the biggest growth or best growth market takes in a huge number of factors that you've got to think about. Skill set is critical, totally agree with that. But I think impact is becoming a really interesting question now being asked by a lot of our institutional investors. And you can have a lot of impact in those developing markets or in those markets that are behind the curve on the transformation.
And just before I turn to Lucy for the same question, which sorts of investors, Alex, are really asking the impact question?
Where I notice that question coming up more and more is from pension funds and insurance companies. So one of the roles government can play is by encouraging, first of all, with carrots and then perhaps with sticks, investors to invest responsibly. And we're seeing that beginning to happen in the UK. That's happening. Institutional investors are being asked to report on how they're aligning their portfolios with these agendas, these impact agendas, responsible investing. And as a result, we're getting more questions, both in sort of requests for proposals and from our existing investors on what's the impact that our capital is having. So that's where I see a marked change over the last 5 years. I don't think 5 years ago, probably when we went into a conversation with a new institutional investor, there might have been one or two questions around ESG, but it'd be kind of a tick box. The last sort of responsible investing questionnaire our team answered was 140 questions long and got right into the detail. And so that is definitely changing.
Okay. Lucy, I'm going to come to you, and let's hold off on where within. So we're still focusing on geography, I'll come in a second to kind of what areas might be the most attractive, but do you have anything to add to the geographical question?
Only that we take enough risk as venture capitalists already, so we we play it very safe on that front, and we stick in Europe.
Okay. Lucy, I'll start with you then. I'd like to go through some of, and I know you range across the piece, so I'd like to ask you as to where you think the greatest opportunities are from the standpoint of growth and return if we look at the category of renewables. So Alex already talked about, solar and wind being the dominant factors. I think that's quite clear. But where do you see some of the, by segment of the market, the most interesting opportunities emerging?
A good question, Rodney. And I think sort of touching on something Daniel mentioned earlier, I think it very much depends on what kind of investor you are. So as us, as a venture fund, we're very much looking for scalable, tend to be asset light investments. And those investments tend to be in what usually software or sort of secondary or enabling technologies. So for example, I would be much more interested in a software to help a solar plant be more efficient. We are invested in one of those, by the way, or sensors that sit on wind turbines, which I've seen a few of, that help the efficiency there, than I would be in say, helping fund a new tidal energy system. So I think that there is potentially a lot of new technologies that are pretty interesting. So I do see a few coming through the door that are the sort of new tidal. There's a lot of innovation in wind, so coming away from your traditional sort of 3-blade turbine, there's all sorts of things. So there's wind kites. I think there's been quite a lot of venture money recently put into kites, and there's some that just have a rod sticking up that resonates with the wind, that's meant to be more efficient than your traditional turbine. So I think there's exciting innovation around there. But from my perspective, it's in the more established renewable tech. So it's in PV and wind, and it's in the enabling tech, or the sort of secondary on top of that tech.
Great, thank you for that, Lucy. Daniel, where do you see the biggest opportunities, or where are you focusing in the kind of investments you're making now?
Yeah, I mean, I think there are two aspects to it. The first aspect, which technology to use, whether it's PV, hydro, or wind, is a function, of, in many ways, where are you located? So it's not so much which technologies, but I think today all the technology we have of the established technology, they're all efficient, reliable, and have become, very cost competitive. So if you go to the south, you tend to do PV. If you go to the north, you tend to do more wind. Norway, we're in Norway in hydro, but Norway has a topography, has a lot of rain up there. It's very suitable to do this. You wouldn't do that in many other parts of Europe or in the world. So you really have to pick the right technology to sort of like what nature is providing. So that's how we look at it. Then the second thing is, depending again what your strategy is, we like onshore because it tends to be a very fragmented market in most countries, which means also that it provides, there's a shortness of capital, particularly in late stage development, because there are a lot of undercapitalized developers, and it brings you an opportunity where you can do a consolidation game, whereas offshore tends to be, fewer players and very big players. Tends to be dominated by, the oil and gas and the big utility companies. So it's a completely different animal. And it's not the right thing for everyone. And then the third one is, if you go into, we are avoiding biomass and biotechnology for various reasons. There's more commodity risk in there. And then also, personally, I have a bit of a problem with some, growing food in order to convert it into energy is something where, I personally have a problem with. I think there are other more efficient way to produce energy and feed the rest of the world. But that's, everyone again has their own stand on this point. So,
thank you very much, Daniel. We'll come to you, Alex, now. So you said, I think in your introduction, that you manage $3.5 billion of assets. I'd love to know, and I think the audience would like to know, how those are currently split, PV, wind, etc., and how you think that might change and where you see the opportunities emerging.
To give you a sort of feel for the split, I mentioned solar PV. I understand we're Europe's largest owner-manager of utility scale solar. So a very large part of our portfolio is solar, maybe 40%. We have a very large onshore wind portfolio across Europe as well. So we have built and are building and developing solar assets in sunny places across Europe. Equally, we have built and are building wind farms in windy places across Europe. So very large part of it is wind and solar. We have a large portfolio of biomass to power stations, but specific types. We're less keen on biomass power stations that import wood from other continents. We haven't got there or got comfortable with that yet. But sort of smaller, locally sourced feedstocks we've got very much involved in and want to grow. I guess the biggest news in our team over lockdown, you'll note that there's no offshore wind mentioned yet, despite that being a very growing market. There's a few reasons we haven't been in offshore wind. To sort of summarize it all, we've just hired an offshore wind expert. His name's Partha Vasudev. He's been investing in offshore wind for the last 10 years, first of all with the Green Investment Bank, then Macquarie, and now with us. And the reason we've brought Partha on and his expertise in is because we now see interesting relative return from that market. So we're always a little bit confused about the relative return for what was a new technology, less proven than onshore wind and solar. So I expect we will be a big part in offshore wind over the course of the next 5 years or so. Just to come back to what excites me, sort of our team, I'm very lucky. They're brilliant at originating new renewable energy investments and executing on those transactions. What I look at and worry about and think about is, if you take as a given wind and solar are going to be huge and you're going to have this massive transformation in energy markets, what risks and opportunities does that create for our investors? And what should we be doing about it? Because there are probably interesting businesses in there. So that kind of storage flexibility, how do you provide security of supply when you're beholden to wind and solar? That's a fascinating thing. We haven't invested in batteries yet. I've not found a proposition that I think is sort of investable for us and our risk appetite, but I've no doubt we will be there in the future. So in answer to your question, Rod, offshore wind is going to be a big part, I suspect. We'll continue what we're doing in onshore wind and solar, and that sort of flexibility storage space we've got to keep a very close eye on, because I think we've got some interesting assets that can help those investment propositions.
Great. So there's a difference of opinion with regarding offshore. I don't know if we want to have that debate here or not, but Daniel's made the point, right, which is it's in terms of scale, it's much more significant. I mean, I don't know if Daniel, you want to elaborate on the point, or Alex, you want to just say if you agree with that and how you're going to overcome that, and then we'll carry on. Just maybe some quick answers on that.
If I understand Daniel's point correctly, I totally agree. Sort of onshore wind, solar, fragmented markets. You can find value there. There's sometimes shortage of capital for late stage development. Totally agree with what Daniel's saying. I think the offshore wind sector is slightly different in that these are huge tickets. Over the course of the last 5 or 10 years, we've had some really big players playing in that space. It's an opportunity for big direct investors to put a huge amount of capital to work. That's very attractive, so they fight hard. But I think the sector is now scaling, and there's been a lot of investment already from those players, that there is the opportunity for managers like us to get in at a decent risk-adjusted return.
Okay.
I know we haven't done it yet, but I'm hoping it's going to be there.
Lucy, nuclear energy, is it part of the renewable energy mix or not? And why?
So, Rod, I know this one's a slightly controversial topic, and everyone has some people have very strong opinions on nuclear, but I'll be careful what I say. But I'm a pragmatist. I think that an okay solution is better than a bad one. I think that if we want to come away completely from fossil fuels, we do need something to fill that gap. And I'll ask, I'm not sure, Daniel, Alex, if you agree with me, but I think that with the renewable technologies we have at the moment, even if we solved the storage issue or the reliability issue, I think we'd struggle with volume or full capacity if we were to come away from fossil fuels completely. So I think that there is a role for nuclear. Obviously, it has its challenges. So hopefully, if technology improves and the amount of capacity improves and our storage solutions improve, it won't be necessarily forever. But personally, I think it's necessary for the time being.
Thank you. Daniel, nuclear, is it renewable or not?
So, it's of course not renewable, but the question is, what does it do to, a carbon-free or carbon-neutral economy? I think that's the right question here. The Germany has decided to close down the nuclear, and being German, I follow very much the press and all things. And I must say, everything what I'm reading, one would be mad now to build a new nuclear power station, because the thing which I would be really worried both for my children, grandchildren, and generation, the long-term problem of the nuclear waste and the cost is so enormous for society that we don't even know how to handle it. And in Germany, these things are now popping up. And there was for a long time, there was the argument nuclear is actually the cheap way of generating electricity, and it isn't. It is probably the most expensive way of producing electricity. So, and the long-term effect of it is enormous and beyond of what we actually, I think, all understand, even so people claim they do. So in this way, I wouldn't be in favor. I think we're better off having some gas-fired power station and even some coal-fired station in the mix to give stability to the system than adding nuclear. But while you have nuclear, you can say also it's a mistake to close it down if you can run it for another 10 or 20 years, because you have the problem, the cost anyway. You might well use it up till the very last end.
Interesting point. Alex, do you want to take on the question of nuclear as well?
I totally agree with Lucy in that it's an emotional subject, and I totally agree with Daniel in that it's expensive. My view on my emotions come out when people describe nuclear as unsubsidized, and it's wrong for me on so many different levels. You only have to look at what happens when it goes wrong, or at the waste, and who picks up the bill for that. Fukushima has cost an enormous amount of money for the Japanese state. Sorting out the nuclear waste problem is going to cost an enormous amount of money for most European countries. So yeah, it's emotional. I prefer we didn't have to have it. I suspect some is needed. I hope by the time we decommission those plants, we won't be building any new ones.
Great, thank you. One quick question from the audience, and this can really be a simple yes or no. It comes from Mr. Ashok Toshniwal. Apologies if I've gotten the name wrong. Do you guys invest in Southeast Asia? So just a quick yes or no. Alex, do you do Southeast Asia?
Not yet.
Okay. Daniel, do you do Southeast Asia?
Not yet, but we looked at some projects. So I expect in the next fund that could be something.
Great, thank you. And Lucy, do you do Southeast Asia?
Afraid not. We're Europe only.
Okay, great. Thank you very much for that. Another question, which I think, Alex, you were the first to mention it, and I think Lucy talked about it as well, but let's just go into it now, is battery storage. Lots of technological innovation there, but also obviously some real, how can I put it, bottlenecks there. We'll start with you, Lucy. Can you comment on battery storage, where the opportunities are and what your thoughts are on it?
Yeah, so I think clearly it's a big topic and super important for the energy transition. I think that we can talk about new battery chemistries, of which there are a few. We can also talk about new battery management systems. So I've seen a lot recently of systems that help batteries last longer and that kind of thing, which is pretty interesting. I think that the biggest challenges with batteries are, well, economically, so bringing down the price and scaling them up, but also the supply chain. so de-risking and cleaning up the supply chain, I think, is a massive challenge. I know that the supply of lithium and the supply of cobalt is difficult and damaging. The lithium comes from the salt flats in Bolivia, and it causes a lot of damage. Although I did just read an article about 5 minutes before coming on this webinar that they found there's been a load of lithium found in Cornwall, which they're going to be able to mine, which apparently it can supply the whole of the UK's need for the next few years. So that's pretty interesting. But anyway, I think that that's a huge challenge. And at the moment, we don't recycle lithium-ion batteries. I think we have the technology and the capability to do it, but it's just simply not economic. So at the moment, we just build new ones, which is not in line with the environmental or green economy. So I think that's probably the biggest challenge from my perspective.
Thanks for that. Daniel, same question on storage.
Yeah, we looked at many projects in Europe. The bulk of them are all within, so like what I would call auxiliary services for grid system stability. Difficult to make the economics work, very volatile from the economics point of view. But we see storage clearly be a very important part in the renewable build out. And you see in the US the first project being constructed and designed where you combine storage with large scale renewables in order to support like a more merchant and PPA based offtake. And I think that's where storage will play an important role, and possibly also is actually a requirement if you want to make it economical, as I expect that regulation will also put more responsibility on so like what I call the system stability onto the operators of renewable energy, rather than having just a right of dispatch and leaving it with a DSO or a TSO to solve the problem. So an important area to look out for. Yeah.
Indeed. Thank you for that. Alex, same question to you on battery storage. You first raised the topic.
Yeah, so I agree with Daniel. We've been looking at battery storage utility scale for 6 years. As Daniel says, the revenues are usually pitched as being from ancillary service markets. And when you dive into those markets, as we did 6 years ago, what you find is they are very high value, but very thin and therefore prone to competition. And the thing that we could never get comfortable with is how long those high value contracts would last for. And secondly, and related, what happens if you get competition from sort of batteries in vehicles that don't cost anything and suddenly the value goes. So we haven't got comfortable with utility scale storage yet. And actually looking back on what's happened and what we understand of the market, I think so far we've been right. I do think when costs drop, if power prices get more spiky than where they are today, and there is that arbitrage opportunity, consistent arbitrage opportunity, maybe that's where the answer lies for utility scale storage.
Maybe ask Daniel and Alex what you think of other types of energy storage. So I've seen, obviously there's hydrogen and green hydrogen. I've seen some other very innovative ways of storing energy, some as simple as of drilling a hole in the ground and dropping a weight into it. Would you ever invest in those types of things, and do you see them being deployed at scale?
Alex, it looks like you're getting ready to speak, and then Daniel.
Yeah, so I love all the different types of storage technologies. My favorite was a decommissioned train, fill it with cement, drag it uphill on a wire, and then sort of let it roll back down again. So perhaps not a scalable technology, and we look for scalable technologies. Look, we haven't found a storage proposition that works yet. I have no doubt we will. So hydrogen, you mentioned there, Lucy, fascinating for us. True green hydrogen produced from our generated electricity from our portfolio. Clearly on the agenda, we're looking at that at the moment, early stages, but I think the more you read about what the European Parliament is talking about in their Green Deal, the more you realise hydrogen's got a role to play. I listen to Shell's corporate presentation the other day on hydrogen. None of this stuff is new. They've been trying for 10, 15, 20 years, I think, and by their own admission have lost lots of money, but they're really excited about it now. So storage through hydrogen, pumped hydro, all of these assets will play a part in helping the power market, once driven by wind and solar, to balance itself, which is critical. Quite which is going to be a winner, and no doubt there will be new technologies. Who knows? I think they'll all play a part, actually, personally, over the next 20, 30 years.
Yeah, thanks. Except maybe trains filled with cement. Daniel, do you have anything to add?
No, I haven't seen the train, but I have seen other technology, which reminds me on sort of like the stories from the Wild West when people came up with all kinds of crazy ideas. But hydrogen is for me actually not a storage; it's a demand side. The same with EV and EV charging station. It's just like it's a conversion and the transition to a sustainable economy that we are, driving cars with hydrogen rather than with diesel and petrol, and we're using renewable energy to make that happen. So it's clearly an area we're watching very closely.
Okay, and I guess, although let's not go into it, Alex, you've already alluded to the V2G, vehicle to grid opportunities. People literally selling energy they've taken into their car batteries and selling it back to the grid. I'd like to turn to another question from the audience. This one is from Thomas Wigley, who asks, amongst the established renewable technologies, where does the panel see the greatest opportunity for generating efficiency gains? Efficiency being kind of number one renewable energy. Let's start with you on this one, Daniel.
We have seen recently enormous efficiency gains. And talking to our engineer, it seems like in terms of turbine sizes, I think it's a bit like the airplane. How big can you build an airplane? And people say the A340 was, or is it the 380 was sort of like as big as you can do a conventional plane. So it's probably, how bigger can you make the turbine? So my gut feel, but I'm not an engineer, would be you probably see more efficiency gains still to come within the PV and solar, generally solar driven rather than the wind. But this is sort of like the layman talking here. So
great. Lucy, we'll go to you next on this one.
Yeah, sure. Thanks, Rod. So I touched on it earlier, but we're actually invested in a French company that does software for renewable asset management. And mostly what they do is solar. So they help manage, or they collect data from the solar farm, and they help optimize that, whether it's through angle of the panels or other things that will help with the efficiency. And I think it's such an important point, because I think when so renewable assets are expensive. They're a huge investment. And particularly if we fall on sort of harder economic times, I think getting what we can out of what already exists is hugely important from an economic perspective, and also from an environmental perspective, because these hardwares aren't sort of no impact to produce. And then other tech I've enjoyed are ones in wind farms, so sort of smart pitching of the turbines, so that's sort of angling them into the wind properly. There's a few technologies around that, and then actually often wind farms have been modeled as one unit. So I've seen a few new technologies recently which sort of splits out all the different turbines to say that actually this one, because it's behind that one, is going to have a completely different wind flow, so therefore it needs to be managed differently. So I think some of those are pretty interesting.
Thank you. Alex, same question to you.
We're building a whole load of wind and solar farms at the moment, but everybody's worried that when you need sort of that last bit of electricity, that the wind won't be blowing and the sun won't be shining. And so we're also building a whole load of fossil fuel power stations in backup. That is kind of 2 generation systems to meet demand, and that's hugely inefficient for countries. So I think the biggest efficiency gain will come from confidence that the cheapest forms of power, wind and solar, can deliver power when needed and the lights won't turn off. That will avoid the need to have kind of 2 sets of generation assets. And what will deliver that is an activated demand side. So helping energy users use power when the wind is blowing and the sun is shining in a customer-friendly way, so not sort of having massive impact on life and lifestyle, but not use it when it's not sunny and windy. And that will be the biggest efficiency gain, I think, that we will see. And it's the confidence. Lockdown has given us a brilliant view that is possible. So power demand dropped by, I think it was roughly 35–40% when people got locked in their homes in February and March across Europe. And therefore, the share of power generated to meet total demand by renewable sources was huge. And I think that gives us a view into the future, that the lights don't turn off and there isn't complete Armageddon when you've got 80% of your power being delivered by wind and solar. So that for me is the biggest efficiency gain, an activated demand side.
Great. Well, thanks for that both macro view and also optimistic note. Carrying on the optimistic thing, we're heading toward the end. I want to give you each a chance to brag about your favorite or best investment. Maybe they're the same. Alex, we're going to start with you, and then Lucy and Daniel. What would you like to brag about and why?
The investment I've enjoyed watching happen the most over the last couple of years has been what our team in Australia has achieved, actually. So they have just finished constructing Australia's largest solar farm. It is enormous. There are nearly 1 million solar panels on it. It's a huge investment. They've built it really well, but its scale is very exciting, but that's not why I really like it. What I really love about that asset is the impact it's had. So Darlington Point just is a small town between Melbourne and Sydney. I think there are roughly 1,000 people living there. It's in the middle of sort of the countryside. There's not a huge amount of economic activity. And when we said or let them know that we were going to start building this huge asset almost on their doorstep, we engaged with that community in a way that I haven't seen us do it before, and it's been so powerful. So I think we ran a careers fair or a jobs fair and said, we're building this and there's going to be lots of jobs for the next 2 years. Would you like to come and hear about that? And I think 200 people turned up. I think we employed 125 men and women on that asset. That's fantastic. I think we preserved 9 special Aboriginal sites within the 20-kilometre sort of fence, and it was blessed by Aboriginal leaders. We had people from the community delivering food and lunch to the 450-person workforce. I mean, it's that stuff that I think it really makes a difference, actually. And I've no doubt if Australian politicians met the community of Darlington Point and heard the positive impact you can have by fostering a renewable energy industry, then Australia would make their change that much quicker. So that's my favourite one.
Great. I hope those blessings help your returns. Lucy, over to you.
I enjoyed hearing about that, Alex. That's a good story. Yeah, I don't like to play favourites, so I won't tell you my favourite one, but one that kind of I think covers most of the topics that we've talked about, and some that we haven't, is a company in Germany called Cloud and Heat. And I think a topic that's often overlooked or not talked about enough is actually the energy intensity of computing. So I think that we think that everything is virtual and we're not having an impact anymore, but actually computing power and data centers swallow up a huge amount of energy. And most of that energy is to power the fans to cool the data centers. So what Cloud and Heat have done is they actually use liquid cooling, or they use water cooling, which on one hand is hugely more energy efficient than using air. And on the other hand, can actually then be repurposed as hot water for heating. So you end up with essentially a sort of net, very, very low power usage because it's essentially just used as a heater and as computing power. And then lastly, I think the other interesting thing you can do with it, which was touched on today, was actually sort of the demand side response. So I think the idea of doing sort of non-urgent compute jobs at a point of energy supply surplus is a really interesting topic. So it obviously doesn't sort of store energy, but it does use it. You can use it when you have that surplus. So I think that's a pretty interesting one that covers a lot of topics in this area.
Great, thank you very much, Lucy. And Daniel, finally to you, what's your favorite?
Yeah, I mean, it's always a big question because I have quite a few favorite, and generally, from a personal point of view, I always like my favorites are the ones which are the most challenging one, and where you feel like you're a little bit at the frontier of creating something new. And this year, I would like to mention our investment in Finland, where Finland, 5-6 years ago, decided to open up to wind because they had very little, and we built up a portfolio where we were at some stage before we sold it, we had something like 20% of the total market share in Finland. And the reason why I liked it, not only because it was from a return, it was an exceptional project, but we built 2 very large wind farms up in the north of the Nordic cycle, which was a very harsh environment where construction was happening at minus 35 degrees. It was a technology challenge. And a big construction challenge also in this weather condition. And that was for me, a very impressive project, how we put that together, and also the collaboration we had with the construction companies and the provider of the wind turbines. And then on top of it, similar to what Alex, the experience was in Australia, it's also because it used to be traditionally very big, heavily relying on mining up in Lapland. There is not a lot of industry, so it also created a lot of new opportunities for the local communities, and we got a lot of local community support, and that was a very gratifying project. So it's sort of like the tombstone is standing on my desk all the time, including the pictures of the construction. So
Fantastic, that's really terrific. The last question I'm going to ask all 3 panelists is where they think a bubble is most likely to take place in the renewable energy sector that might burst. And Daniel, unfortunately for you, I'm going to start with you, and then Lucy, and then Alex. So where do you think there is the greatest risk of a bubble forming?
In many ways, what we're always worried about is, because it's a growth market, there are lots of opportunities. We are mostly worried about a lot of investors coming in who don't really know what they're doing, and they can tarnish in many ways the industry. And we had in the past, failures in the industry, which was, in my mind, everyone has successes in this, but some were badly managed and reflected on the whole industry. So in this way, where it's not per se a bubble which bursts, of course, at the moment, pricing is very aggressive. There's a lot of capital around, interests are very low. So in this way, the returns, particularly for long-term, can be pretty low, but they're at the same time also very stable assets. So I don't think it's per se something wrong. It's always relative to the performance, but I'm always worried mostly about like people tarnishing the industry by coming in, throwing a lot of money and doing damages, which then reflects both on the like the concept of transitioning, as well as the responsible investors in this industry. And I think all people in here, we all have an interest not only to make good returns, but also to make an impact. That's a very important aspect for all of us, and many of which drives our passion also for this industry.
Amen to that. It's clearly important to us as well. Lucy, where do you think the bubble might be most likely to form?
Well, I think there's always a bubble somewhere in the investment world, and I think, one of the effects of the pandemic is to flush the market that's already full of money with more money, which doesn't help. But it's not something I worry about too much in this space. I think that some people might say that a lot of tech in this space has been very hyped from a venture perspective, but personally, I think it's with good merit. And I think that that there is real value in this sector. So it's not something I'm hugely concerned about.
Great, thank you. And then finally to Alex.
Yeah, I echo some of what Daniel said, actually. So there's a lot of interest in the market for lots of good reasons. That brings in investors, that pushes prices up. So what do I worry about for investors? Making sure that we are maintaining price discipline in that environment, similar to what Daniel spoke about.
What would you say to those who say that Europe is no longer an attractive opportunity set globally? We'll go in the reverse order now, starting with Alex and then Lucy and then Daniel.
I disagree. I think you've got a great, stable environment. You've got some great assets, well understood, mature markets, and good risk-adjusted returns. So we're in and staying.
Lucy, you have a fund focused on Europe. What's your answer to that?
Betting the whole farm on Europe. Yeah, I think it's a fantastic venture environment. From my perspective, I think it's reaching a point where it's really competing with US tech. I think we're seeing a lot of US venture funds coming over to Europe to make the most of the strong market here. So from my perspective, it's a strong market as well.
Okay, and finally to you, Daniel.
I don't think only it's a strong market, it's by far the best market because it's the biggest, it's the best environment, and there's a clear conviction across Europe to transition, and I don't see that in the rest of the world.
Great. Thank you all very much for that. I'm going to attempt to summarize quickly. So there's a large scale of funding required for us to fully decarbonize. Some firms have it at 7 trillion. A number was mentioned that Europe alone, I think by Daniel, is 80 billion dollars annually into renewables. Then we talked about where the opportunities were, and I think the consensus of the audience was that really there's something for everyone. It depends on where you're starting from, what your risk profile is, what your appetite is, etc. It's agreed that wind and solar, PV, are the key and areas, although there were other areas that were mentioned, some mixed views, I think, on biomass and also maybe not such different views on offshore wind. Impact is becoming a key question. Pension funds and insurers are driving that. There's money in kites. Onshore is very fragmented. There's lots to do in the efficiency area across the board. Huge opportunities in storage with a range of different technologies. Getting tribal blessings helps returns. There's a serious issue of energy in computing power that people need to focus on, and absolutely no bubbles yet. So fantastic. I want to thank our three outstanding panelists for sharing their time with us and their insights. And I want to just plug our next session. So we do these monthly. The next session will focus on the future of food. And it is on the 15th of October, also Thursday, also at 2 o'clock. I hope we see you all then. But in the meantime, on behalf of Paul Hastings, Octopus Investments, and ClearlySo, I want to thank Lucy, Daniel, and Alex, and all of you for joining us. Take care and have a good afternoon. Bye-bye.